Hi guys, Dane here. I'm just going to do a quick video about how to set up your chart so it looks like mine and get these two moving averages that we follow during the bear market for accumulating. So first thing you want to do is go to tradingview.com. So get an account, it's completely free, and set up your chart. So once you're on the charts right here, you can go to BTC USD and look at the one that says index, that shows them all. Find this little icon like this, switch it over to logarithmic. So here's normal, just change it to the log chart like that. It's easier to see. It's based on percentages instead of dollars, because from $1,000 to $2,000 is 100% move, where from $10,000 to $20,000 is 100% move, or $50,000 to $100,000 is a 100% move. So we just want to look at our charts based basically on percentages, which you do that by going onto the log chart. Once you have your log chart, you're on the BTC index. Find something that says indicators. Let me see if I can pull this down a bit. Indicators. You can save favorites. These are the ones I have saved. What you're going to look for is this one right here. So you're going to type in moving average, do this little bracket, put in the number 2, and then look for the one that says Bitcoin Census. Click on it. From there, you're going to get a little spot over here. Go across this little icon, hit it. You want to make it yellow, red, green, blue. Don't worry about these ones yet. You only want these two checked, because these are going to be our yellow 1,000-day moving average and our red 200-week moving average. You're going to go over to inputs. On the length for the yellow one, you're going to put in 143, because 143 weeks is roughly 1,000 days. The second one, you're going to put in 200. That's going to be for the red one, the red 200-week moving average. I've also added, but I don't always have it on the chart, the 300-week moving average. So you'll type in 300. That is going to be your blue one. And then 52, which is, sorry, it's going to be your green one for the 300-week. The blue one is your 52-week. You come down, 52. Don't worry about these ones yet. I do have numbers that I use. I swap them up depending on whether we're in a bear market or a bull market or just a holding pattern. I don't have them filled out right yet. Just focus on these four for right now. So 143, 200, 300, 52. The style is, you're going to have yellow, red, green, blue. Really only worried about the yellow and red pretty much all the time. So here we are. And then you should have a chart that kind of looks like this. Make sure you're on the weekly, because if you go over to the daily, it's literally going to be 143 days and 200 days. That's not what we want. Let me switch it over to the weekly. You really should only be watching the weekly chart anyways. There's no need to go down to the daily chart unless you're really trying to hone in on a certain buy. But really for the game that we play, we just accumulate whenever we're under this 1,000-day moving average, and really start accumulating under the 200-week moving average. The reason I've added in the 300 is just because last market we've seen that's where it bottomed out. So it's just something nice to watch. The further down we go through these rings, the heavier I like to accumulate. We can see it's never been below the 300-week moving average before, but that doesn't mean that it won't. that's that. If you do want to add one other indicator to help yourself, I do suggest the RSI, in which you will go into indicators again. Make sure you have your moving averages saved in your favorites. Go to RSI, so you can just type it up here, RSI, and you'll find it, Relative Strength Index. Click on that, and it's basically just an overbought, oversold. So whenever it's way up here, everybody's buying. You can see the market's moving up. Down here, everybody's selling, right? We want to be buying when everyone's selling. So we can see we are below this dotted line right here, which represents 30 on this. That generally means oversold. We can see every time in the past, whenever we've been down in this range, you know, it's been basically the bottom of our markets, you know, all through here. Here we can see some bullish divergence. So the indicator is moving up. At the same time, the price was moving down. That's what we call bullish divergence. It happens at the top of markets too, which we then call bearish divergence. Here we can see we bottomed out below that line again, and you know, it was basically the bottom of the market. You know, back over here, we got below that line again, and it was basically the bottom of the market. So, and then let me just take this one off, because until we're below the 200-week moving average, I'm not too worried about it. But then that's how you set it up. Super easy, stress-free. After that, it's just a game of patience. So that's all for this video. All right, guys, you have a good day. Peace.